Well, you'd have seen from as you say, from the vote we had at the last meeting, and also from the minutes at that meeting, that I think the committee is certainly prepared to do what's necessary to reach our remit, with risks still to the downside. That yes, it's quite possible that more monetary easing will be needed over time.
I want to ask you then directly about those negative rates, because you sort of danced around to their Deputy Governor. We've seen in the past a domino effect from the US Federal Reserve policy. If they were forced to take rates negative, would that mean an implication that you would also have to consider doing the same thing?
No, I don't think so. There's no direct impact. We keep under review all our potential policy tools. This is a question that's been thought about, I should say, on and off, since the financial crisis. And it's a balanced judgment. The very reason that central banks conducted asset purchases was because they felt that interest rates were reaching some effective lower bound. And at these levels, you have to think about, obviously, the beneficial effects directly of cutting interest rates on demand, but also what might be the potential effects on the balance sheets of financial intermediaries, and whether if you cut rates beyond some limit, you actually risk doing more harm than good, because with deposit rates floored, you contract the margins for banks, and may even, in the limit, encourage them to or risk encouraging them to reduce lending rather than to increase it. So these are the balanced questions the committee has to think about. And as I say, it's been thinking about them on and off for the past decade. You will remember that in 2009, the committee decided to stop at 50 basis points, precisely for this reason. And at that time, it was the case that the balance sheets of many intermediaries, particularly building societies, were quite weak, and that many of their assets, the interest rates on many of those assets were tied directly to bank rate, and it was felt at that time to go below 50 basis points would risk producing this perverse effect, and that's why the MPC in 2009 stopped at that rate and started doing QE. Some years later, and some years ago, the committee came to the view that because balance sheets were stronger, and with the help of a particular funding scheme we introduced, we were able to go lower, and we're now at that level. It's not to say that we stopped thinking about this question, but that, for the time being, is where rates have gone. And as you know, we also expanded QE asset purchases in March by $200 billion.